Of course, like from the last lesson, we already know the difference between the credit sale and the cash sale. So I don't have to explain again. Just quickly remind you, when there is a immediate payment for anything, we consider this one as a cash sale. When the person said, I will pay you later, we said this is a credit sale. So when you buy something or when you sell something, if we pay to our buyer later on, that's a credit purchase. If the customer pay me later on, that's a credit purchase. And if I paid for that immediately, that's a cash purchase or could be cash sale. So cash purchase and the credit purchase, or cash sale and the credit sale, never depend on the method of payment. So how you pay, it doesn't matter. If you pay immediately, doesn't matter how you pay, it's a cash sale. If you pay later, that's a credit sale. Doesn't matter how you pay, like cash, card, or bank check, bank transfer, anything. So that's not a problem. All right, so let's start with that. Recording the credit sale, chapter number 4. In this chapter, let's have a look at the chapter overview. We can see in this chapter what we're going to learn or what we're going to see from this chapter. In this chapter, we're going to see 6 stages of sales process. This one is very familiar to us because we have done already last class, but we're going to see this one again because this is also involved with the credit sale recording process. So first thing we're going to see 6 stages of sales process. Before that, we have seen 6 stages of buy process. So selling and buying is just opposite. When you buy something, you become the purchaser. So when you sell something, you become the seller. So sometimes you are the customer and sometimes you are the supplier. That's the difference. Other than the way, the process, the stages is almost same. As you already know, the first thing we're going to see, if I want to sell something, the first thing we're going to receive, that is quotation from the customer. So if a customer wants to buy something, the first thing they will do, they send me the quotation. So they will ask you, like they'll send me the inquiry and they will ask you how much will be the price for that product. And we have to send them the quotation. So this is process number 1 and step number 1. The next step we have customer order. So customer order, if the customer happy with that, and the customer if the customer happy with that, and of course, like they make the order. Give me a second. One student just trying to join. I think there is some issue with that. Let me send the invitation once again to her.
All right, guys, sorry for that. So 3 student was waiting. They couldn't log in, so I just need to send the link again. Okay, hopefully they can join now. Should be fine now. All right, so as I said, like this stages, so 6 stages of the selling process. The first one is quotation. Once the customer happy with the quotation, then they make the order, that is customer order. And after that, we have to dispatch the goods. So we need to send the goods to the customer. And after that, we send a payment request and good return, and finally the payment. Now this one we already done from the last chapter. Of course, if you join today, maybe you can read chapter 1, 2, and 3. And also you can see the recorded video I have on your portal that will help you to understand all of this. I just quickly want to make sure you remember all of this. Let's quickly have a look. What documents are you going to looking for in every process, in every stages? What documents we are going to looking for? So what documentation we generate and what documentation we keep? What documentation we keep on our record? So let's have a look. The first one, quotation. Can anyone tell me what documents we're going to keep for the quotation? So what is the documents will be generate during the quotation process? So the quotation itself, very well done, Khalid and Sepi. Yes, the quotation itself will be our documentation. So if someone asks me, have you done the inquiry and what is the evidence? I said, this is the quotation. This is my evidence. That's my documentation. So quotation itself is our documentation. The next one we have customer order. For the customer order, what documentation I'm looking for? What documentation I'm going to keep on a record as a file for the future visit for HMRC or for my manager, for anyone. So the order confirmation, yes, or customer order, that could be one of the documentation that I'm looking for and going to keep as a record. So for the customer order, we're going to say customer order itself is a documentation. Goods dispatch. So goods has been sent off. Goods has been sent off. I send you goods. So what is the documentation I'm looking for? If I receive the good or if the good has been sent, what is the documents I'm going to keep as a record? So I'll definitely keep the delivery note. Very well done. Delivery note, Nehal, very well done. Delivery note is a document that will prove or that will tell me the goods has been sent off. So delivery note. Delivery note. All right, the next one we have payment request. What is the documents we are looking for from here? Payment request. So if you are looking for the payment and if you want to give a reminder to your customer, like I have given you the product and can you make the payment? What is the documentation looking for? We're looking for invoice. Very well done, Peter. Yes, very well done, Maria. Very well done. I can see all of you remember this. That's really good. So invoice is the documentation for the payment reminder. Remember, in business, we never paid before. First, we receive the product, then we make the payment. This is the difference between your personal life shopping and the business shopping. So when you buy and sell something on the business, you never receive the money from the customer until the product has been received by the customer, or you never pay to the supplier until you receive the product from the customer. Then we have goods return. What is the documentation we're looking for the goods return? Very well done, Tamir. Yes, we're looking for the credit note. Remember, when there is a return, there is a credit note. When there is a return, there is a credit note. So return means credit note. Good return, credit note. And finally, the payment. What is the evidence or what is the documentation we're looking for the payment? Very well done, Karen. Very well done, Muriel. Yes, remittance. Remittance advice is the last step. Remittance advice. So when I make the payment, I tell my supplier I make the payment and I keep the record of that. That's called remittance advice. So remittance advice means you let your supplier know that you make the payment. That is remittance advice. All right, very well done, everyone. So I can see all of you remember that. That's really good. So I can see all of you did revise. So that's really good.
Okay, the next headings we have dealing with errors. What happens if there is errors? For example, if you find the discrepancies. Discrepancies means the difference. Discrepancies means the difference. Difference between what? Difference between the order and the invoice. Difference between the order and the invoice. For example, we have an order and we have invoice. We have two things. We have an order and we have invoice. Now, whatever I have ordered, I'm looking for the same amount on my invoice. For example, when I make an order, let's say I said 100 unit and every unit £5. So that should be £500. So then on the invoice, when the supplier send me the invoice, I'm expecting that will be £500. Now, for example, on the order it is £500 and they're charging me £600. If I find any discrepancies, any difference, I have to tell the supplier. So that was the commitment on the time of the order. So you cannot give me the wrong price or you cannot give me the different price. Sometimes on the order, they said the trade discount is 10%. And on your invoice, you see they give you your trade discount 5%. So it is not matching. If this is not matching, the discrepancy created, the difference created, so you need to tell the supplier. Sometimes they said if you pay within 14 days, the terms, pay within 14 days, they'll give you prompt discount 2%. But on your invoice, they didn't say that. On the terms, they said just monthly payment, net monthly payment, so that you can check it is not matching. So every time, if you are the person who is the bookkeeper, for example, you are the one who works for a company as a bookkeeper. Now, when you make the order, you have the copy of the order. And after a few weeks or few months, when you receive the invoice from the supplier, so you have your order on the left-hand side. So on your left hand, you keep the order, and your right hand, you hold the invoice. So you look at your order and look at the invoice, and you try to match every single thing so that you understand the supplier charged you the right amount with the right price, with the correct discount, with the correct payment terms. So you look at your order and you look at your invoice and you match everything before you make the payment. So remember, if you're the person who is working as a bookkeeper, this is your responsibility. You don't pay the wrong amount to the supplier. Okay, the next one is completing the sales documents. So once we have the order, once we have the order from the customer, so the next job as a bookkeeper, let's say you are the supplier, so the next job for you to prepare the invoice and send it to the customer. And we know how to prepare the invoice. We know how the invoice look like. All we need the order. If we know the order or if we know the delivery note, if we have one of them, we can prepare the invoice. So we know what should be in the invoice. So the top middle name, there will be supplier name. On the left corner, the customer name, then customer order number, then customer reference number, then the date of the invoice, invoice number, quantity, email, amount, details, net, VAT, and the gross. All of this will be on the invoice. So we know how to prepare the invoice, but we're going to see how to basically do all the calculation. So enter the detail, enter the amount. We did it already, but we're going to do it again. All right, so one more thing we're going to see on the next chapter, that will be the purchase, but we'll see in the next chapter. For the time being, that's all you're going to see from chapter number 4. So let's go inside and explore more what we have in this chapter. Let's go. Okay, here we have something that is called a statement of financial position. That is not relevant to your level 2. That is relevant to level 3. So we have a paper in level 3 that is called final account preparation. On that paper, you're going to see all of this. But here I want to introduce you some area that you need to calculate your accounting equation. So later on, we're going to see accounting equation. But before that, I want to tell you some important stuff. For example, let me in someone. Yeah. So for example, let's say if you are accountant, you see on the sheet there is a lot of accountancy firm and they said charter accountant. Now the first question is what they do. what do? They prepare the accounts for the client. Who is the client? The business, isn't it? The business are the client. Now, what type of services they provide? They provide the VAT services, they provide the payroll services. Now, the next question is, if you ask an accountant, I have a business, what I need to do? Let's say one of you, let's say Nehal, open a business, and Nehal went to the accountant and asked the accountant, what I basically need to do. I'm doing my business. Let's say I open a flower shop. So I buy the flower from the village and sell it on the street market. What I actually need to do? And I have a company. Let's say I have a limited company. The accountant will tell Nehal, like, Nehal, you have to submit accounts. We have to submit accounts to HMRC and company house. We have two things. One is HMRC, one is company house. Some of us, we only know about HMRC. We don't know about company house. You really don't have to until you need it. But remember, we have another body that is called company house. So all the company house, they deal with the companies. If you want to open a company in UK, you don't open the company from HMRC. You open the company from company house. This is some of you never maybe know about company house, but this is true. You don't open the company from HMRC. HMRC only deal with the tax matter. HMRC have no more relationship with the companies. Companies opened by the company house. You have to submit the accounts. You have to submit the confirmation statement. If there are any changes, of the director, if there are any changes of the shareholder, you tell company house, not the HMRC. So let's come back to the point. So your accountant said, Nehal, you have to submit the accounts to HMRC and company house. Now Nehal said, I don't know what is accounts mean. What does that mean, accounts? Now when you said accounts, this is the main job done by the accountant. So we talk about two things, mainly two things. There's some other thing as well, but mainly two things inside of the account. One is profit and loss account. Sometimes we called it SPL, Statement of Profit and Loss Account, SPL, Statement of Profit and Loss Account. And the another thing we have is Statement of Financial Position, SOFP, Statement of Financial Position. So profit and loss account tell you profit and loss for the business. Profit and loss account we prepare only once in a year. Remember that. Profit and loss account we prepare only once in a year. For the whole year we prepare once and submit to HMRC. On the other hand, the statement of financial position, this is your asset and liability. It's the asset and liability. So asset and liabilities is all about how much asset you have and how much liability you have. You can prepare your statement of financial position as many times as possible. So that's why you always see this one say as at. It's never said year ending. If you see the profit and loss account, it will tell you year ending, but the financial statement always tell you is a as at. As at means for that day only, for that day, because on 31st of December 2018, your company asset and liability was like this. So next day it could be changed. Next day you can sell some asset. Next day you can buy some asset. So on that day, your asset and liability position was like that. It's very, very important to understand. Yes column, basically statement of financial position and the balance sheet is the same story. They just changed the name. So after 2015, they changed the name. Before it was balance sheet. So you can, if even still you can remember that balance sheet, there is no problem, but you don't write this one anymore because they changed the IS. So we don't say statement of, we don't say balance sheet anymore. All right, so once we have this two is submitted to HMRC and company house. Now, what is inside of the P&L account, like profit and loss account? Inside of the P&L account, we have only income and we have expenses. We have all the incomes and we have all the expenses. And of course, if I tell you like, how much is the profit? Even any person is not from the accounting background. If any person not from the accounting background, this person can also say like, do I make any profit or loss? Isn't it? You don't have to be accountant to tell I'm making a profit or loss. So they'll tell you my income was £100, my expense was £50, and my profit is £50. So we understand the difference between the income and expense is the profit. And we pay tax on the profit. We pay tax on the profit. So this is our main aim, to identify the profit from the profit and loss account so that we can pay the right amount of tax. On the other hand, on the statement of financial position, SOFP, we have asset and liabilities, and also we have some capitals. So when I said assets, we have a different type of asset. We're going to see what type of asset we have. Then we have a liability. We have a different type of liability, and we have a capital. Capital means the money invested by the owner. You don't have to know very detail in this level 2, because we have a level 3 this paper. We have a full book only for this paper, final account preparation. Okay, let's have a look what is inside of the statement of financial position. I just wanted to explain all of this so that you understand from where it is, like it's coming from where, so where it is coming from. So just don't jump on there, so you understand like this is the requirement, that's why you're doing it. Okay, so let's have a look at what we have here. The statement of financial position. SEPI, basically, we are using international terms from, yeah, you can say that. Basically, UK GAAP, that is General Accounting Accepted Principle, and the IS, all the accounting terms is coming from the IS. IS means International Accounting Standard. So we're following the IS. You can say most of the country accepted that, unless they have a local GAAP. For example, the UK have some local GAAP as well. So if you go to, for example, Australia, they will tell you, no, we don't accept this UK chartered accountant because we have CPA. For example, if you go to USA, they will tell you, no, we don't use the chartered accountant, we have CPA. So this CPA is a little bit different than our chartered accounting. It's the same thing, same syllabus, but a little bit different. So yeah, IS is like international one, and most of the country, they adopt IS. All right, so let's have a look what else we have here. The first thing we're going to see here, that is called assets. Asset. Now, all of we know the asset. What is asset? Obviously, like if we ask like what is the definition of asset? In accounting term, the definition is a little bit weird. For example, they said like an entity that creates future economic benefit. So an entity that creates future economic benefit, that we call asset. So if we buy something and that will create future economic benefit. For example, today if we buy a photocopy machine, and if the photocopy machine start printing the paper, so that means this machine adding some benefit for the company, so that's our asset. So this one we can say this is our asset, and all more or less all we know, like exactly, even if we don't know the definition from the accounting terms, but we know what asset means. Now, in the accounting terms, we have two types of asset. One, we have non-current asset. We used to call it before fixed asset, but now we call it non-current asset, and we have current asset. So non-current asset is the asset. Non-current asset is the asset that business want to keep at least 1 year. So if any asset business planning to keep at least 1 year, we call it non-current asset. On the other hand, if any asset we want to sell it or we convert into cash within 1 year or less than 1 year, we call it current asset. So current asset. So current asset less than 1 year, and non-current asset more than 1 year. For example, if you buy a plant, property, machinery, then building, land, all of this we can say this is our non-current asset. On the other hand, inventories, stock, for example, if I make 100 pens and if I could only sell 80 for this month or this year, so this 20 I'm going to sell as soon as possible, isn't it? So this is our inventories. So inventory is a current asset. Then trade receivables and other receivables. Trade receivables means you credit customer. So the customer who buy from you on credit. For example, you sell this pen to someone, and that customer said, I'll pay you later. Later means not after 1 year. Later means after 1 month, maybe 2 months. So this customer going to pay you within a year. So very soon, this customer will be converted into cash. So we called it current asset. So trade receivables is our current asset. On the other hand, we have cash and cash equivalent. Cash and cash equivalent means you have some cash on your business, that's the raw cash, and sometimes you have some money on the bank, this is the raw cash, and that is equivalent something we have cash equivalent. So if it is equivalent to cash, for example, sometimes you have a bond, sometimes you have something that you can convert cash immediately. So this is called cash equivalent. So if you have something that, this is also current asset because you can convert into cash anytime. So if any asset that will be converted into cash within a year or very soon on short period, we call it current asset. So two types of asset, non-current and current. Then you have a liability. We have the same thing. Any liability that we're going to pay more than 1 year, this is our non-current liability. We don't have any example for the non-current liability, NCA, non-current liability, NCL, non-current liability. Non-current liability, for example, mortgage. If you take the mortgage, you paid the mortgage more than 1 year. Maybe the bank loan, 5 years bank loan, 10-year bank loan. If you take the bank loan, you paid more than 1 year. So that is your non-current liability. And any liability you have to pay within a year, that is a current liability. So that could be bank overdraft. Bank overdraft is the money that is payable on demand. Payable on demand. If anyone have a bank overdraft, you will see on the bank overdraft is written payable on demand. So payable on demand means bank can ask you anytime for this money. So tomorrow you have an email from the bank and say, can you pay the money back? You have to, because this is payable on demand. Then trade payable and other payable. Trade payable is like opposite of trade receivable. So this one is a credit supplier. So you buy something from the supplier on credit and you said, I'll pay you later. So later means after 1 month or 1 week. So you're going to pay very soon. This is your current liability. Liability means I'm liable to pay something to you. That's your liability. All right, so there'll be no question from this area, but you need this information to understand for the accounting equation. We'll see how it works later on. Then we have a capital. Capital is the money invested by the owner of the business. Capital is the money that is invested by the owner or shareholder of the business. So capital we have, and the profit from the business. So if you make a profit, that will be added with the capital. Remember one thing, capital is increased by the profit and decreased by the drawings. So plus profit, less drawings. What is drawings? Drawings means if owner of the business, listen again, if the owner of the business take any money from the business for the personal use. For example, SEPI is the owner of one of the business and SEPI takes some money for the private holiday. So she take the money from the business, and go for a private holiday. So if you are the owner of the business and if you take the money from the business for any personal reason, we call it drawings. And because of drawings, your capital will be reduced. So business will tell you, listen, you're taking the money from me, so I'm going to pay you less money. So because of the drawing, your capital will be reduced on the business. Okay, let's move on. So we have accounting equation. We're going to see it later on. Then you have a statement of profit and loss account. Now the statement on profit and loss account, we can see here, we have a revenue. We don't add or don't, tell me you mean like you do not add the current liability for accounting of capital? Well, like capital is the part that is come from the owner investment, and only the profit could increase it, and if there is a drawing, only that could decrease it. And capital and the profit together, liability and the capital together, it will be equal to your total asset. Okay, so let's have a look at this one, profit and loss account. You can see this one, statement of profit and loss account for the year ended 31st December. Now you can see we have information that said year ended. So for the whole year ended for the whole year, it's not as at. Before it was as at for 1 day only, but this one talk about year ended, that means for the whole year. Okay, let's talk about the revenue. What is revenue? Revenue is the sales. Revenue is the income. Revenue is the turnover. Same thing. So they can sell revenue, they can say sales, they can say turnover or income, same story. So revenue, sales, turnover, income is the same, just a synonym is the same thing. From the sales, we minus all of our cost. So from the sales, we minus all the cost, expenses, everything to find our profit, isn't it? So from the income, we minus everything to end up with our profit. And this profit actually going to be added with the capital later on. So income minus expenses basically is your profit. It's a very basic calculation. There's nothing you have to understand from here. So income minus expense, that's your profit. When you do the activity, if we need, we'll explain more. But for the time being, that's it. Because from here, there will be no question in the exam. So you don't have to worry too much for that. Okay, so you can see here some UK terms and some international terms. So you can understand that, like in UK, we call profit and loss. In international, they say SPL, statement of profit and loss. In UK, we used to say balance sheet. Now in the international term, we say the statement of financial position. In UK, we call fixed asset. In international, non-current asset is stock, inventory, trade receivable, trade debtor, trade creditor, and trade payable. It's just a different name. So some international you call something, and in UK call something else. That's it. So this one is the 6 stages of sales process. So I think we explained that. So quotation, customer order, then dispatch, good dispatch, and payment request, and the good return, and the payment. So I think we have done before, so you don't need to think about it. We did this one before. Let's go to the main area, that is invoice. This is one of the important areas you need to understand, because if you work in anywhere as a bookkeeper, you'll see a lot of invoice. Either your company will tell you enter the invoice on the system, on the software, or they will tell you prepare the invoice, send to the customer. So you have to have a very good understanding of the invoice. Okay, let's have a look at that. We have activity 2, sales invoice. On 25th of March 2000, HH delivered the following goods to a credit customer, EE, Elizabeth Elstree. So the customer is Elizabeth and the supplier is HS. We can see on the delivery notes, we have a delivery note. What we deliver? We deliver 2,500 items of tomato soup. So 2,500 tins of tomato soup, product code 8321. We have supplied to the customer. The list price of the good was 30 pence per tin plus VAT 20%. List price means before any discount. Remember this one. List price means before any discount. The list price of the goods was 30 pence per tin plus VAT 20%. If the question don't say VAT 20%, we know VAT is 20%. Elizabeth Estrie customer file show the following. Discount policy, 15% trade discount, 5% bulk discount for order over 2,000 tin. So if a customer order more than 2,000 tin, they will get 5% bulk discount additionally. I think this customer is eligible, isn't it? Because she ordered 2,500 tins, so she is eligible for that. What is the question here? Requirement, complete the invoice, okay? Then we need the customer account code, we need the delivery note number. After that, we need the quantity, product code, then total price, net amount after discount, VAT and gross. Very well done, very good question, no problem. So let's do that. So let's write it down in the corner because we cannot see everything at the same time. So let's write this one, delivery note number. We need it, delivery note number. That is 84,251. Then customer account code. That is, we have ELI 053. Very good. Now let's do our workings. So we have 2,500 tins. 2,500 tins. And per tin is 30 pence. Per tin is 30 pence. So 2,500 times 30p. How much will be the total list price? First, we're going to find the list price. List price means before the discount, isn't it? So 2,500 times 0.30 is 30 pence. So we said our list price is 750. Very well done, Sadia. So 750, this is our list price. Very well done, Khalid. Very well done, Ona. Very good, Jishan. So that's our list price. Remember one thing. First, we give the trade discount. Always remember, first we minus the trade discount, then the bulk discount. First, we give the trade, then bulk. So the trade discount, we can see here 15%. So it's a trade discount 15%. How much will be the trade discount? 750 times 15%. 750 times 15%. So that is 11250. Okay, 11250. Very good. So if I minus the trade discount, how much the amount after the trade discount? So after trade discount, how much is the amount? 637.50. Very well done. 637.50. Very good, Muriel. Then I'm going to give the bulk discount. But before giving the bulk discount, I need to check, is that customer eligible or not? I can see she ordered more than 2,000, so I think she will get 5% because she ordered 2,500. So I said bulk discount. Remember, the bulk discount will be not on the list price. Bulk discount never give on the list price. Bulk discount will be on the 637. Very, very careful with that. Some students, they calculate the bulk discount on the list price, but this is not right. Bulk discount will be always on the after the trade discount price. So that will be on 637.50. So bulk discount 5%. How much it is? So that is 31.87. Okay. 31.87. Very well done. And if I minus that, how much it is? So 637.50 minus 31.87. So amount after all discounts. So amount after discount, that is 605.62. Okay. 605.62. Very well done. What is left? What is the final thing we need to do now? What is the final thing we need to add? We need to add the VAT. Very well done, Ona. We need to add the VAT. So VAT 20%. We need to add on 605.62. So VAT will be 121.12. Okay. 121.12. And we're going to add the VAT because we charge the VAT to the customer, and later on we give this VAT to HMRC. And how much is the gross amount we're looking for? The gross amount 726.75. Okay, 726.74. Okay, very well done. That's all. That's our calculation is done. Now all you need to do, you need to go to our invoice and complete the information. So write it down here, the customer account code. What is the customer account code here? So customer account code, we have ELI053. Then delivery note number, we have 84,251. Very well done. Then we have a quantity. Quantity, we have 2,500. This is our quantity. Then the product code. I think you need to look at the product code. Let's go back. Let's have a look at the product code. The product code is 8321. Okay, 8321. 8321. After that, we do total list price. The total list price is 750. Very good. Net amount after the discount. We talk about net amount after the discount, after all discount. Net amount after all discount. 605.62. After that, we talk about the VAT. How much is the VAT? 121.12. And finally, we need to add our gross amount. And the gross will be the total. We already have the workings. That is 726.74. That's it. That's how we can prepare the invoice. From the invoice, that's all you need. If you know the information, you can prepare the invoice. It's not a big deal to prepare the invoice. All right, any question from here before we move to the next question? If you have any question, you can let me know. No questions, so let's move on then to our next question, next activity. Okay. And the next activity, we have activity 3, credit note. We already know credit note is all about the return. So let's have a look at that. What is the requirement here? Complete the credit note. Okay, that's fine. Let's do that. So we have a credit note. Let's read that. Let's read the question. On 21st of July, 2000, Jasper & Co. returned 5 faulty DVD players to Darren Dune. So Darren is our supplier. We return to Darren. The VAT rate is 20%. A credit note needs to be raised, including detail as follows. Of course, like how does it work? I'll tell you. When you return a product to your supplier needs to send you a paper, and this paper will tell you, like, you have returned 5 faulty DVD. So the price is this, the VAT is this, and the net is this, gross is this. So this paper is the credit note. And this paper you're going to use against your invoice. So from the invoice, you minus this amount and you pay the remaining figure to the supplier. So let's have a look at that. Product code 5295. Let's write it down. Product code 5295. Okay. Unit per price. Customer account number. Let's write that. Customer account number. That is JAS003. Okay. Then after that, we have the calculation. Let's do that. So we have a list price. Let's do the list price. The list price, we have price per unit prior to discount is 55 per unit. So let's do this. 5 unit total 5 faulty DVD times 55 per unit. How much is the total? 275. Very well done. Very well done, Anna. So 275 is the total. This is before the discount. Then the customer order 5% discount. So it's a trade discount, 5%. How much is the 5% trade discount onto 275? That is 1375. Very well done, Evelyn. 1375. Okay. So if I minus the 1375 from the 275, how much is the net amount? Net after discount. 261.25. Okay. 261.25. And finally, we're going to add the VAT. So VAT is 20%. We know it. VAT is 20%. How much is the VAT? 52.25. Very well done. 52.25. And how much is the total? The gross. 313.5. 313.5. Very well done. Very well done, Khalid. So that's how we can prepare the credit note. The calculation is done. Now we're going to complete the credit note. So let's have a look, go inside and complete the credit note. So here we can see the customer account code, that is JAS03. Then we have a quantity, we know it is 5 faulty DVD. This is a credit note. You see that? So this credit note, the customer going to use it against the invoice. Let's say you receive an invoice for £10,000. Now you're going to minus this amount, 313 from the 10,000, because there is some faulty goods you return and you got the credit note. Product code, we have SL95. List price 275 before the discount. After the discount, 261.25, VAT 52.25, and the net, the gross is 313.50. That's it. So that's how we can calculate this credit note. Once you send the customer a credit note, do you need to send them an update invoice? No, sorry, we never do that. So you never send any update invoice. Invoice you send only once. You never change the invoice amount. Only when you send invoice, so what you do, you send a credit note, so customer will minus the amount, and after that customer will send you the remittance advice. And on the remittance advice, customer will tell you why he pay you less. So he'll tell you 10,000 minus credit note number 454 minus 313.50. This is the amount. So customer will send you the remittance advice and you're going to record the same way. You never change the invoice amount. All right, so very good question. So let's move on to the next one. The next topic, we have accuracy of the business. As we said, we need to check our documents, isn't it? Let's have a look. Activity 4. On activity 4, they said checking business documentation. Okay. A supply of Wilbro have been delivered to Jody Ersin. So a supply of Wilbro, that's a product. You have been delivered to Jody by Garden Fittings Limited. So Garden Fittings is the supplier and Jody is the customer. The order sent from Jody and the invoice from Garden Limited are shown below. So there is an order, there is invoice. We need to check both are matching, isn't it? So let's have a look. Maybe I try to make a little bit smaller so that we can see at the same page. Maybe, yeah. Okay. All right. I think that's good. Okay. So let's have a look at this is our order. That's very, very important. This question will be in the exam, so very careful. This is the order from the customer, and this is the invoice sent by the supplier to the customer. We need to make sure I only paid for what I have ordered. I'm not going to pay for something that I never ordered. I have ordered something and you never keep the commitment. Let's say you said during the order time the amount will be £1. And when you charge me on the invoice, maybe you charge me £2. So that's not fair. So I have to check everything. Let's read the order first. On the order, it said 20th of March, 2nd of March, please supply 35. Look at the quantity. Please supply 35 Wilbro, product code 841951. The product code is so important. I explained before as well. Product code is so important because if you don't have the product code, they might send you the wrong product. For example, if you order some washing machine or if you order some computer, now the computer have a different model. Now, if you order some washing machine and they charge you £500 and you didn't write the product code. So what happened? They send you the washing machine, but the cheap model. And you call them, you said, this is the washing machine I didn't order. And they said, you didn't mention the product code. So you order only washing machine. That's your washing machine. So product code is so important because washing machine could have 100 model. So you need to give the product code which model you have ordered. Very, very important. Then purchase price, this is 60 per unit plus VAT, 60 plus VAT, okay. Discount is 10% trade discount, 5% prom discount as agreed. So 10% is trade and 5% is prom. I hope you remember what is prom discount. Prom discount is when you pay for the early settlement. So when the supplier give you an option and they're saying to you, if you pay me early, I'll give you some discount. For example, every invoice, normal terms is 30 days. If you receive an invoice, even there is no due date, Invoice is due within 30 days. That's the standard term. If you work for a company, if you receive an invoice from a supplier, even though there is no terms like say pay by this day, but normal standard is 30 days. Now, if the supplier said pay within 30 days, but if you can pay within 10 days, I'll give you 2% off. So supplier encouraging you to pay early. If you can pay early, you'll get some additional discount. This is called prompt discount. All right, so that's fine. Let's have a look at invoice now. On the invoice, you can see 35 Wellbro product. So that means the order is correct. That's fine. So the right amount of product has been delivered. Product code 814951. Is it match? So our product code was, I have ordered 841951, but I can see 814951. So this order, they sent me the wrong product. So I said, no, the product code is wrong. This is not right. Then we have per unit. So they said the order will be per unit 60. And I can see they charge me 60. I'm happy with that. No problem. Then you have a trade discount. You see, they give me trade discount 5%, but the commitment was trade discount 10%, isn't it? So on the order, during the order time, they said, I'll give you a 10% trade discount, but on the invoice, I can see they give me only 5. So they're giving me less discount. So I'm not happy with that, isn't it? I said, no. Then after that, the prompt discount, they said 10% prompt discount. This is even not right. That was 5. Even though it is more, but still it is not nice because that is not matching. This is not the one I should order. All right, that's fine. So let's have a look at the requirement. What is the requirement of the question? The first requirement here is the product code on the invoice correct? Is the first question. Is the product code on the invoice, is it correct? Is it yes or no? The product code is not correct. The product code is not correct. Very well done. Very well done, Nehal. Very well done. The product code is not correct. So we said no. So then, no CP. We don't say order note is correct. So order note is always correct. This is the order you have made, because once you make the order, then you get the product. So order made by the customer. So customer is always right. Customer send me always the right product, not the invoice. Okay, the next one. Has the correct unit price per Wellbro have been charged? Per unit, is it the right price they charged? Very well done, Evelyn. Yes. Yes. Very good. So this is yes. Then the next one, has the correct trade discount has been applied? Has the correct trade discount has been applied? The answer is no. It's not the correct trade discount is applied now. Okay, so this is kind of easy. We know all of this. That's fine. Then we have the next one. What would be the VAT charge if the invoice was correct? So that means if they give us the right amount of trade discount, how much will be the invoice? What would be the total amount charged if the invoice is correct? So let's go and do that. It's not a problem. It's not a big question. So only we have to change the trade discount. So my list price is same, 2,100, because they charged me the right amount. How much will be the 10% of the trade discount? 2,100 times 10%. So 210. If I minus the 210, how much will be the net? So 2,100 minus 210. How much will be the net after the discount? 1890. Okay, 1890. And if I add the VAT 20%, how much will be the VAT? 1890 times 20%. How much will be the VAT? 378. 378. Very well done. And if I added this, how much will be the total? 2268. 2268. Very good. You can see now they are charging me 2,394, but I supposed to pay only 2268. So they're charging me more because they're giving me less trade discount. That's why. All right, so let's move on, complete our quotient. So we said, what would be the VAT charge? This is 378, we know it, and the total will be 2268. That's it. So what will be the VAT charge if the invoice was correct? What will be the total amount if the invoice was correct? That will be the amount. All right, so let's move on. The next topic we have, checking the accuracy of customer receipt. Okay, let's have a look at that. So yeah. Okay, so checking the accuracy of the customer receipt. So what happened here? Sometimes customer paid the money to the supplier and they don't send the remittance advice. It's very, very common. So they transfer the money to the supplier, but they don't send the remittance advice. And because of that, supplier don't know who paid the amount, who paid the money. So sometimes they just receive the money and they have to look for which invoice they paid. For example, Sadia is one of the customer for Dell or for British Gas. Now British Gas have a lot of customer. Sadia just paid £700 or £1,000 and write the customer account number and say customer account number, reference number, paid. But she didn't say for which invoice she paid, because every month she received the bill from British Gas, but she didn't mention for which invoice or for which month she paid. She just paid a random amount. Maybe she added 3 months and paid. So that time, as a bookkeeper, you and me, we have to find it out for which invoice she paid. So we need to learn how to identify that. So from this question, we're going to learn how to identify if a customer pay randomly any money, how are we going to find that? Okay, so for every customer, we have account. For every customer, for every credit customer, we have account. This account is called sales ledger. For every customer, for every credit customer, we have account, and this account is called sales ledger, SL. As soon as you see the word SL, sales ledger is all about the credit customer, individual customer, only one customer. If I said sales ledger for Sadia, sales ledger for Nehal, sales ledger for Jody, that means I'm talking about one individual customer. So that means how much is due from them. So for example, if my manager tell you, can you tell me how much is due from Sadia? We said sales ledger for Sadia, and we opened the account, and we can see how much is opening. The money is due from Sadia. So every single customer, we have a sales ledger account. For every single customer, we have a sales ledger account. On the other hand, for every single supplier, we have a purchase ledger account. So as soon as you see the word sales ledger, it's a customer account. So you expect some money from the customer for one customer. So if I have a 10 customer, I will have a 10 sales ledger account. Remember that. If I have a 10 supplier, I will have 10 purchase ledger account. And one more thing, I want you to remember that sales ledger is a customer account. That means he's your asset. If you expect some money from someone, he's your asset because he's going to pay you some money. He's your asset. And asset always come to the debit side, so left-hand side. All the asset invoice will come to this side. For example, if you make a sales to Sadia, you're writing here like 500 invoice, again 500 invoice, again 500 invoice, invoice number 1, 2, and 3. So every time she buys something from you, you write it down on the debit side because she is the asset. If she paid any money, you're writing on the credit side. So you write bank. Let's say she paid £100, you write on the credit side. That's your bank. Bank means she paid some money to you. If she returned to you anything, you write credit note. Let's say £50. So from this account, what we understand, we're expecting £1,500 from Sadia. And from 1,500, she already paid 100 and 50 she returned. So she's not going to pay 150. Whatever is the difference, that's called balance CD. This is the money we're going to expect from Sadia. So that's how we calculate it. So writing on the debit side, writing something on that side will increase the balance. Writing something on other side is decreasing the balance. So this side is like a plus, this side is like a minus. All right, so let's read this question. Let's have a look what's happening here. The account shown below is the sales ledger of silver. Okay, a check for £750 has been received from this customer. So we have a customer, Heidi Limited. We have a customer called Heidi Limited, and this is our sales ledger. We are the company Silver. So Heidi Limited is our customer, and we received £750 from this customer, Heidi Limited. And the question is, which amount has not been included on the payment? Which amount has not been included? So out of all of this payment, out of all this transaction, which one is not included on 750? We have to find it out that. So let's have a look at that. For example, Heidi Limited, they just paid me £750 check, but we really don't know for which one she paid. She didn't tell it. So we need to identify that. So let's find it out. So 1st of July, at the beginning of the month, 1st of July, the opening balance BF means balance brought forward, is opening balance. So at the beginning, we're expecting £6,000 from Heidi Limited. 1st of July, we said, Heidi, you have to pay me £6,000 from the last period, from the month of June. Maybe you have some due, you didn't pay it. So your total balance on 1st of July is £6,000. I told Heidi, you need to pay £6,000. And on 5th of August, Heidi paid me £6,000. So this invoice, opening balance, this opening balance is gone. The amount was due 6,000 and she paid me 6,000, so it's gone. The next one, 25th of July. 25th of July, she ordered again. 25th of July, she ordered again. And this time she ordered £1,200. Something, whatever, the product or services, whatever, she purchased again for £1,200. We said, all right, that's fine. She purchased again £1,200. Then on 30th of August, she purchased again 1,310. And only I can see one credit note. She returned once £450. Now the question is which amount is not included on the amount? So which amount is still outstanding, is still need to pay by Heidi? So let's have a look. So £1,200 was invoice number 501, the first invoice. And after 25th of July, she returned something on 29 August as 450. Return means credit notes. So the credit notes will be always minus, because if the customer returns something to me, she's not going to pay for that, isn't it? So customer returned to me, she's not going to pay for that. So 1,250 minus 450, how much it is? Should be 750. Yeah. So we understand now. We received the check 750. So we understand now exactly what she did. She took this invoice 1,250. She minus the credit note and paid this amount. That means this one and this one is also clear. So which invoice is not clear yet? Which one is still outstanding? It's very clear now to identify, isn't it? Now we can see, Heidi, you have to have one invoice. You still have one invoice to pay. This is the invoice. You have invoice number 505. Can you pay that? Invoice number 505. She still need to pay. So this question will be in the exam, 100% sure. All you need to do, you need to know how to do it. They're not going to give you more than 4 figures. So here is 3. They might add one more. So you need to calculate one by one to identify the figure until you're happy. All right. So that's good. Very well done, Sabira. So let's move on to the next question. Now the next question, they said an invoice is being prepared to be sent to Heidi Limited for £3,200 plus VAT of 640. So an invoice is being prepared to send to Heidi Limited. Okay, so one invoice you are making to send to Heidi Limited for £3,200, £3,200 plus VAT, 640. You don't have to calculate the VAT 20% because they said the VAT is 640. All you need to add, because they said plus VAT 640, so you don't have to calculate the VAT. Prom discount 2% will be offered. for the payment within 15 days. So also we're telling Heidi, this is the amount 3,200 plus 640, that is total. But if you can pay within 15 days, I will give you 2% discount. If you can pay me within 15 days, I'll give you 2% discount. Remember, this prompt discount is not a legal obligation. It's not by force. It's not something you have to take. So Heidi can say, yes, I can take it because I have a lot of money. So let's take the offer and get 2% discount. Or Heidi can say, I don't like this discount. I don't have enough money. I'm going to pay within 30 days. Up to Heidi. The invoice date is 4th of September. Okay, they said the invoice date is 4th of September. All right. From 4th of September, we have 15 days to make the payment. So always remember, you take the date from here, 4th of September. From the invoice date, you have 15 days to make the payment if you want to get the discount. All right, that's fine. Let's read the question. Question number B. What is the amount Silver should receive if payment is made within 15 days? So if Heidi Limited really paid within 15 days, how much money are you going to receive? So we said 3,200 plus the VAT 640, isn't it? How much it is? 3,200 plus 640. So 3,200 plus 640, that is 3,840. 3,840, and we'll get some discount, 2% discount, isn't it? You can minus 2% from here, or you can multiply by 98%. It's going to give you the same result. So you'll multiply by 98% because 2% is the discount, 98%. So that will be 3763.2. 3763.20. So this is the amount we're expecting if the customer pay within 15 days. All right, that's fine. So 3763.20. Okay, the next one we have, what amount should be included on the credit note to Heidi Limited if the prompt discount is taken? As we know already that this one depends on the customer, like this prompt discount. So we do not include this discount on the invoice. On the invoice, remember, on the invoice you only include the trade discount and the bulk discount. Prompt discount we never include on the invoice. Why? Because we don't know the customer going to take the offer or not. So when the customer said, thank you very much, I want to take the discount, I want to pay within 15 days. So what we're going to do, we're going to send you another credit note. We'll say, thank you for going to make a payment within 15 days. I'm going to give you some additional discount as I promised 2%. I'm going to send you another credit note. So we're going to send you another credit note. So the credit note will be for what? For 2%. So you're going to say total amount was 38.40. And the 2% of that, how much will be the discount? 38.40, and 2% of that, the discount Heidi going to get 76.8. So this is the total discount, 76.80. Now my next question is, inside of the 76.8, is there any VAT inside, Sepi? So if we got the 2% discount, is there any VAT inside? So this amount we got from the total, isn't it? And inside of the total amount, there is a portion of VAT inside. So we understand there is a VAT inside. We have to take out the VAT. How we take out the VAT? If the VAT is inside, how we take out the VAT? Do you remember that? If the VAT is inside, how we take out the VAT? So 76.8 divided by 6, very well done. Yes, if the VAT is inside, if the VAT is included, we never multiply by 20%. Remember that. We divide by 6. So 12.80. Very, very well done. And how much will be the net? So VAT minus gross, that will give me the net 64. That's it. Very well done, Khalid. Very well done, Nehal. Yes, very well done, Janus. Yes, got the right result. So I have seen some student on the exam, when this question comes for the prompt discount, on the gross amount, they write the full amount, 38.40. They thought it's for the total invoice. Do not do that, because the question is clearly says, what is the amount should be included on the credit note? Credit note for the discount. Highly limited if the prompt discount is taken. So this one is only for the prompt discount. I'm going to give some additional discount. Don't take the whole amount here and write it down and give the full discount. You'll get 0 if you do that. Okay, number D, we have, what amount should Silver receive if the payment is not made within 15 days? So if the company Haiti Limited don't pay within 15 days, how much are you expecting? We are expecting the full amount, isn't it? So expecting the full amount, that is 38.40. So if you don't pay within 14 days, then you give me the full amount, that is 38.40. This is the amount you're expecting. Why the prompt discount is taken from this, not from this? Okay, so if you want to take from this one is this amount, what the question said, Sadia, this amount said, what will be the amount if we receive the, if they make a payment within 15 days? This amount is after the prompt discount, isn't it? This is the money you're actually going to receive from the customer. So if you give another discount from there, so you're making more or less from there, isn't it? So this amount is already after the prompt discount. It's 98% here after the 2% discount. If you are confused about the 98, so minus the 2%, it will give you the same thing. The reason I said 98, it will make you save your time. So whatever the amount, just times by 98%. Rather than you calculate the 2% and you minus, you get another figure, it will take a long time. If you do the 98% multipliers, give you the same thing. If you understand, is okay. If you don't understand, you can always minus 2%, get the figure. All right, any question from here before we move to the next chapter? No, VAT rate is always fixed, AP. It will be 20% fixed. They'll never give you a different VAT rate. It's fixed. VAT rate, you don't have to worry about VAT. VAT is completely fixed, so you don't have to worry about it. All right. Any more question from here? No? Okay, let's move on then to the next chapter. This is the end of the chapter. We move to the next chapter then. The next chapter will be more or less relevant, but this time it will be credit purchase, recording a credit purchase. So last time we have seen what happened if we sell. This time we'll see what happened if we buy. So this time we are the buyer. We're going to buy from the supplier. So how we record this? This one we're going to see from this chapter. So let's have a look. This is the same story, 6 days of purchase process, quotation, purchase order, good receipt, payment set. The documentation is same, you know it. So there is nothing new here. So only some new thing here. We have remittance advice, we have a statement of account. We're going to see this one from here. Okay, so we already know this process, quotation, purchase order. I think we have discussed enough for that. Let's talk about the business accuracy. Accuracy of the business documentation. This one, before we have seen order and the invoice. So that time it was we are the seller. This time we are the buyer. So let's have a look. This question. Accuracy of business documentation. Aston Limited placed an order with a new supplier, W&W, and has now received a delivery from them. So let's say talk about you, that's you make an order from one of the supplier, that is W&W, and you receive the delivery now. What was the order? Your order was aluminum sheet, product code 5366. This question very carefully read, because the number they will give you very close. So if you don't read it very carefully on the exam, you will end up with the wrong number. You might say yes, because that will be very close. So the order was, please supply product aluminum sheet, the product code 5366, and the quantity is 50. red plastic square, product code 4529, and the quantity is 45. Discount less 10% trade discount as agreed. So that was the order from us. And the delivery note we have received, good received note. So you can see here, we received 45 of the aluminum sheet, 5366, 50 of the red plastic square, 4529. Then we have received by, who received it. Then we have check by, no one signed for the check by. Comments, 3 plastic square damage on arrival. Now you can see here on the delivery note, sometimes no one signed it, check by. This is very common. It's not something like you should be surprised, because if you think about Tesco and Sainsbury, when they receive the delivery, they receive the whole lorry. They receive the whole lorry, and inside of the lorry there is thousands of items. So for the warehouse manager, it's very impossible to check every single item they order. So they just receive the delivery, they take the pallet and keep on the warehouse. They nicely display everything, and after that, the order department, the purchase department, they come, the purchase clerk check everything, what was the order and what was the delivery. So that time it is very impossible for the warehouse supervisor to check everything, whatever was ordered, and receive the right product, because they receive a huge quantity of the delivery. It's very common. This question say received by B Bob, but checked by no one check yet. This is very possible. And the comment, sometimes when the warehouse manager take the product, if there is a damage, they write it down on the comment. They say 3 plastic square damage on arrival. That's fine. Let's read the question. What is the requirement here? Says, check the purchase order against the good received note. So check the purchase order against the good received note and answer the following question. Is the purchase order number correctly included on the good received note? So let's have a look. Purchase order number. So our purchase order number was PP8471. 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 So the answer will be what? Yes. The purchase number is correctly included on the good received note. Yeah, this is correct. The next question we have, has the correct quantity of aluminum sheet has been delivered? So whatever we have ordered, the aluminum sheet, did we receive the right quantity? Let's have a look how much you ordered the aluminum sheet. We ordered 50. Now how much they give it to us? Aluminum sheet 45, isn't it? So we said, oh, this is answer is no, they didn't give me the right one, because I ordered 50, they gave me 45. The next question we have here, has the correct quantity of red plastic square has been delivered? So another product, that is red plastic square. Did we receive the right amount? So how many red plastic we have ordered? 45. And they give us 50. They just swap basically. I ordered red plastic 45 and more aluminum sheet 50. They gave me like 50 that and 45 of that. So we said no. Then the next question we have, are the product code correctly included on the good received note? The product code. Product codes. Let's have a look. The product codes 5366 and 4529. 5366 and 4529. Yes, the product code is correct. So we can say yes. Then we have, has the good received note has been signed to confirm the good were checked? So is it yes or not? Is it checked by someone? We said no, no one checked. This one is yes, no, this is yes. So people who received the product signed by Bob, like received by Bob, but checked by no one. No one said I checked it. So no one checked it. The answer is no. So basically what we learn from here, if we order something and once we receive the invoice or the delivery note, make sure you check it against your order. Whatever order you made, you always check with the delivery note and with the invoice so that you always pay the right amount. It's very important. Okay, so this is it for the checking. Let's have a look what else we have. Turning the goods, credit note, statement of account. Okay, So let's talk about the statement of account. Anyone can tell me what is statement of account? Anyone have any idea what is statement of account? Statement of account. Now it's like a bank statement. It's like the bank statement we received from the bank every month, and this one is sent by the supplier to the customer. Statement of account sent by the supplier to the customer. So statement of account sent by supplier to the customer. Statement of account sent by the supplier to the customer. So telling everything. So for example, a statement of account normally sent by the end of the month. So from the month day one, let's say if I receive a statement of account for the month of June, so from 1st of June till 30th of June, we're going to see how many times we have ordered, how many times we have returned, how many times we have paid, everything will be there. So for example, you can see here how many times you have ordered. So invoice, 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 invoice. We ordered 4 times in the month of May. And how many times we paid? We can see here only one check we have paid. This is 5,500. So this is the one sent by the supplier. So Samuel Limited is the supplier. Peter Limited is us. We are the customer. So Samuel Limited is the supplier who sent this statement of account to us. We are the Peter Limited. So this is called a statement of account sent by the supplier to the customer, telling everything. How many times you order, how many times you paid, how much you return, everything. On the other hand, even though I receive a statement of account, for example, tomorrow if you receive a statement of account from British Gas and they said, dear Evelyn, this is a statement of account. On the statement of account, you have seen you order this, and they're asking for £5,000 from you. Now you're not going to pay it, isn't it? So you before you pay, you said, let me check with my record. Let me check with my record first how much is due to you. So doesn't matter if I received the statement of account from a supplier. I'm not going to pay the amount until I check my book. So what is my book? For the supplier, we keep the purchase ledger, isn't it? So you see, the Samuel Limited is the supplier here, and I'm the customer here. But I have a record. I have a book for Samuel Limited as well. This is purchase ledger, Samuel Limited, purchase ledger, Samuel Limited. So for Samuel Limited, I also keep a record. So before I make the payment, so all this statement of account, after that, you can see Samuel Limited is asking £6,900 from us. So she is asking £600–900 from us, but I'm not going to pay until I check my book how much is due from my book. And I'll always prefer on my book. If my book says something and the statement of account says something, I'm going to tell the supplier, listen, my book says the record is different, your book says record is different, so we need to do the reconciliation first before I make the payment. So on the statement of account, on the bottom balance is the balance the supplier asking from you, and from your book, every time when you buy something, you record on the credit side. It's a liability, that's why on the credit side. Left hand side is the debit side, right hand side is the credit side. Every time when you buy something from the supplier, from Samuel Limited, you record on the credit side. And if you paid any money, we record on the debit side. Because the writing on the opposite side is like a minus. This side writing anything is a plus, you need to pay more money. Writing this side, anything is a minus, that will give you the balance. All right, so we'll do this question. We'll take a break now. After that, we'll do the question with the statement of account. Before that, we'll take a break. Let's take a half an hour break. We'll come back 8 o'clock. And before we take the break, please make sure you write it down your full name for the attendance. Everyone, please write it down your full name. That will help the admin to do your attendance. I'll see you in 30 minutes time. All right, welcome back. So we're going to start with this question, checking the statement of account. So let's have a look at what is the requirement for this question. So checking the statement of account is all about how much money you're going to pay to your supplier after checking the statement of account. The statement of account, as I said, it will be received from the supplier and received by the customer from the supplier. So before you make the payment, whatever supplier asking for, you need to check your book so that you can match the balances. So let's have a look. What is the question here? The question here we have is to answer the following question. Which item is missing from the statement of account from Salary Limited? So which item is missing from the statement of account? So something is your book on the Samuel Limited, but not on the statement of account. They said which item is missing from the supplier account in the purchase ledger. So what is on the statement of account, but not on your book, that is purchase ledger. So statement of account is sent by the supplier and the purchase ledger is your record, that is your book. Okay, so let's do this one, the first one first. Which item is missing from the statement of account? Let's have a look. So which item is missing on the statement of account? So something is on our book, but not on the statement of account. So let's have a look. What is it? So statement of account. So let's have a look at that. So we have 505, 505. 4,200, we can see 4,200 here. We have 500 and we have 500. Then we have a payment for 5,500. We can see it here. This one, 408, we don't see on our book, isn't it? 408 is missing. So this one is missing on our book. So this is the one we can see here missing. And the next one, they said, which item is missing from the supplier account in the Peter purchase ledger? So we can see there is an amount for 4,200 and that is not in the supplier account. So this is like very, very important. You need to understand that. So one thing is missing from the statement of account and another thing is missing from our book. So this one, 2,200, that is, we can see, is missing on our book. We don't see it here. On the other hand, we have 4,200, the money we have paid, that is missing on the statement of account. So if something is missing on their book and something is missing in our book, so we have to update our account. We have to update our account. So that means we need to record this 2,200 on our book. So here I'm going to add 2,200, so amount will be high. And also I'll tell them, listen, I paid 4,200. You just said I paid once, 5,500, but I have paid twice. So I paid 4,200 as well. So can you include the amount and give me the new figure? So they will include this amount and they will give me the new figure. The reason we don't see this 4,200 on the statement of account is this one, statement of account up to 28th of May. You can see the supplier, Samuel Limited, he sent me the statement of account up to 28th of May. But I have paid 1st of June. As I paid 1st of June, that means this money received after the 28th of May. So that's why this month, the statement of account, I'm not going to see this amount. Maybe for the next month, when you're going to receive the new statement of account, we're going to see this amount there. Okay, that's fine. So let's move on to the next one. The next one, they said, assuming any difference between the statement of account from Samuel Limited and the supplier account in the Peter purchase ledger are simply due to error of omission, what is the amount owing to Samuel Limited? So if I think it is just the timing difference and this is the error of omission, so what amount we should pay to Samuel Limited? So Samuel Limited asking how much? 6,900. This is the money they're asking from us. So from there, we're gonna include £4,200. This is the money we paid already. And this £2,700, this is the money actually is due to that supplier, because from £6,900 we already paid 4,200, but they didn't receive the money yet because they sent me the statement on 28th of May. I paid them 1st of June, so they didn't get the money yet. So of course I would minus this amount and I would say this is the money still outstanding, 2,700. Very well done, Sharon. So this is the money still outstanding, 2,700. All right. Now we're going to see if this has happened, how we reconcile the amount. So there's a reconciliation of purchase ledger to supplier statement of account. Let's have a look. This is because of the timing difference, of course. Sometimes it takes some time to clear the money when you send a check. So this is the only reason it's not matched. Other than everything should be fine, because sometimes at the end of the month when you send the check, when you pay the money and the statement is not up to date, so that's why it gives me the outstanding figure. Sometimes it's wrong, but when you make the payment, if it is paid by check, sometimes it takes time to clear the check. Okay, let's have a look at reconciliation of a purchase ledger account and a supplier statement. Let's read this question. So shown below is a statement of account received from a credit supplier, and the supplier account as shown is silver purchase ledger. So we have statement of account that is from Jen Jackson. So Jen Jackson is our supplier. On the other hand, to us, we are the Silver Limited. So we are basically the customer. So we buy something from Jen Jackson. Jen Jackson is the supplier. So Jen Jackson sent us the statement of account and asking, they said at the opening you are supposed to pay 900. After that you buy again, that is now you paid 750. Then you buy again 2340. So this is the total balance 2492. Then you return 150. So the new balance is 2342. Then you buy again 725. So new balance is 3067. After that you buy again 1250. So new balance is 4317. So this is the money asking by the supplier when 29th of May. Okay. On Jen Jackson, this is our record. This is our record for the supplier. So this is their record for the supplier record. This is our record, purchase ledger. So I want to see what is the difference between their record and my record. So this is my record for the Jen Jackson. Jen Jackson is the supplier. So I keep a record for every single supplier, and that is called purchase ledger. So let's have a look. So I said at the beginning the due was £900. I can see yes, £900 was due. After that they said I ordered 2342. I can see it here. 725. I can see it here. So this is all I can see. Then 2342 I can see it there. Then I make a payment 750. I can see it here, and I return 150. I can see all. So only I can see one thing, that is invoice number 841. Yeah, it is here, isn't it? Invoice number 841 is here. That's fine. So one invoice, two invoice, that's fine. Everything is here. Only I can see one invoice, 891. This one on the statement of account, but I don't see it in my book, isn't it? It's 29th of May. The reason is I don't see it. On my book is up to date up to 22nd of May, isn't it? But this book is here is up to 29th of May. So 29th of May, I buy something, goods from the supplier, but I did not record on my book. So this one is missing on my book, except that everything is up to date. So £1,250, invoice number 891. So that's fine. Let's have a look. What is the question here? They said balance on supplier statement of account. So according to the supplier statement of account, how much money they're expecting from us? The bottom figure. Remember, always the bottom left figure, right figure is the money they're expecting from you. So 43717 is the amount they're asking from you. That's fine. So we say this is the money they're expecting. And the next question is balance on supplier statement, balance on supplier account in the purchase ledger. So according to our record, how much money how much money is the due? So I'm going to add all of these three and minus these two to identify how much money is due according to our record. So supplier asking 4,317, and according to our record, how much money we expecting the money is outstanding to the supplier? So 3067, okay, 3067. We added all the invoice minus how much you already paid and how much you return. So should be 3067, okay. So 3067, let's go there. 3067. And how much is the difference here? How much is the difference? The difference here is 1250. How do you get this figure, Nehal? What is this? 1250, okay. This is the money, is the difference. This is the money, is the difference. And the next question we have, which item on the supplier statement of account has not yet been entered in the supplier account in the silver purchase ledger? Do you remember that? Which invoice was not entered on our record? Invoice number 891, isn't it? This is the amount, invoice number 1250. This is the invoice we have on the statement of account, but not on our book. And this is the reason the difference is coming. This is the reason the difference is coming. Okay, that's not a difficult thing. So let's move on to the next one. Paying to the supplier authorization. Let's have a look at the authorization policy, prompt discount. Okay, let's read this question. This one we have done before, just quickly complete that. Prompt discount. Aston Limited has received an invoice from supplier W&W. The invoice has been checked and agreed as correct and can now be paid. It is Aston policy to take all the prompt discount offered by the WW. So this is the customer policy to take all the discount offered by the supplier. Okay, that's fine. We can see here our gross amount is 765. This is the amount the supplier expecting from the invoice. So we're supposed to pay this amount unless we take the offer. So question said we always take the prompt discount. Okay. The terms is 2% prompt payment discount for the payment received within 14 days from the invoice. 14 days from the invoice. What is the invoice date? 1st of December. Okay. So from this day, 1st of December, I have 14 days to make the payment in order to get 2% discount on this amount, 765. All right, let's have a look at that. What is the latest date payment can be received by the supplier W&W if Aston Limited is to take advantage of the prompt payment discount? So if the customer want to take the discount, what is the latest date they need to make the payment? So from the invoice date, we have 14 days. So by which date we need to make the payment? So the supplier need to get the payment by 15th of December. Very well done, Tamina. Very well done, Banu. Yes, by 15th of December, the supplier need to receive the payment in order to get this 2% prompt discount. Very good. The next question we have, what is the total amount that should be paid to the supplier, that is W&W, offering after deducting the prompt discount? So after deducting the prompt discount, how much money we should give it to the supplier? So we can minus 2% or we can do multiply by 98%. The way easy for you to do that, there is no problem for that. So 765 times 98%. 765 times 98%. That is 749.7. Okay, that's fine. We understand that. And the last question we have here, Aston Limited took the prompt discount and so paid a reduced amount to W&W. Wells Way, the supplier, must now prepare a credit note for Aston Limited, detailing the prompt discount taken and the relevant VAT. So now let's do the credit note for the prompt discount. How much will be the gross amount? This is the total amount, 765, and 2% is the total discount, isn't it? How much is the total discount? 765 times 2%, 1530. Okay, SEPI 1530. And how much is the VAT inside? If the VAT is inside, we need to always divide by 6. So 2.55 is the VAT. And the difference will be the net. So gross minus VAT is the net. So gross is 1530 minus 2.55, and the net is 12.75. 12.75. Very well done, CP. Very well done, Nehal. So this is the credit note. Now we're going to send to the customer because they paid me within 14 days. All right, so that's not difficult. We already practiced that before, should be fine. Let's move on to the authorization policy. Now, every company has an authorization policy. Authorization policy means, like, for example, let's say you are the person who make order, who buy everything for the company. But it depends how big the order you can process. For example, if the amount is £100, let's say your manager said, listen, Nehal, if the amount is £100, so you don't have to tell me, you just make the order by yourself because it's a really small amount, £100 you can make yourself. Then your manager said, if the amount is 1,000, please take a sign from our manager. So if anything, if you need to buy for the business, if the amount is more than £1,000, then you take the sign from the manager. And also, they said, your company said, if the amount is more than £5,000, please make sure you take the authorization from the director. So if the amount is big, 5,000 or more than 5,000, you always make sure you take the authorization from the director. So every company have a different authorization policy. This one is not fixed. This one could change by the company to company. Sometimes the small company, every single item you buy, you need to take authorization from the director. If the big company, then there's a chain of command, but it's vary to company to company. Okay, let's read this question here. We can see here authorization is say at Tim Toy Toys, T Toys Limited. The authorization procedure are as follows: expenditure, so the amount you're going to spend, expenditure, and the authorization required. So they said if it's less than £1,000, so if you buy something and the cost is expenditure is less than £1,000, you take the authorization from the line manager. So you tell the line manager, can you sign, because I want to buy something and the price is less than £1,000, so you need to sign. If the cost or expenditure between 1 to 5,000, so it's more than 1,000 and less than 5,000, then you take the authorization, you take the signature from the line manager plus manager from another department. So your line manager plus manager from other department. If the amount you're going to buy that is more than 1,000 and less than 5,000, so between 1 and 5. And if the expenditure is more than 5,000, if the expenditure is more than £5,000, what you do? You take the sign from line manager plus finance director, because the amount is big. So line manager plus finance director. Okay. So let's have a look. Answer the following question by dragging the relevant item into the table. Not all item will be used. However, item can be used more than once. So they just said it. That's fine. So from here, we need to drag the information and fill in the blank. Let's have a look at the first question. There's a purchase of raw material cost £300 should be authorized by. So you are buying something, raw material, and the cost is £300. So that should be authorized by whom? That should be authorized by line manager, because if the amount is less than £1,000, if the amount is less than £1,000, that should be authorized by Line manager, yes. Amount is less than £1,000 authorized by line manager. Then the next one we can see here, purchase of an item of machinery costing 49,999 should be authorized by whom? So you're buying something, the cost is almost £50,000. So that will be authorized by whom? Is it Tamina and Khalid? Read the question very carefully. So line manager and the finance director, yes, very good. So it is more than 50,000, 5,000. So that is line manager plus finance director. Very well done. Yes. So this one has to be line manager plus finance director. Yes, very well done. Then we have purchase of good costing 3,500 should be authorized by. So you buy something goods and the cost is £3,500. So that will be authorized by whom? Line manager plus another manager. So manager from another department. That's perfect. Very well done, Anna. So line manager plus manager from other department. Very good. That's a simple thing. There's nothing to understand here. It's just like they want you to understand. Every company has authorization policy. So if someone give a paper, if someone give a anything like ask you to order, don't just order. If you're the person who work as a purchase clerk, or if you are the person who work as a bookkeeper, if someone asks you to order something, do not order until you know the authorization policy for the company. Let's say if you join a company as a new employee and you don't know the authorization policy, if someone bring anything to give it to you and say, can you order this one? Before you make the order, you need to ask what is the authorization policy for the business. All right, so the next question we have from the remittance advice. Remittance advice sent by the customer to the supplier. So let's have a look. What is the question here? So let's read the question first. It says remittance advice note. Justin Jukes send back's remittance advice note to supplier. Of course, customer send the remittance advice to the supplier on the last day of the month. Following the month of the invoice. Following means next, remember that. Following means the next. For example, this month is August. So if I said following, that means that will be September. Following means the next. Banks is bank automated clearing services. Tanya, Banks is bank automated clearing services. So this money is basically you automatically transfer from the bank. Okay, so Justin Jukes sent back's remittance advice. So back's remittance advice is when you make a payment to the supplier, so you just transfer the money from your bank to the supplier account, but you need to tell the supplier for which invoice you make the payment. Because maybe you buy a lot of product from the same supplier and you make an order every week. You make an order on every week and you buy a lot of product from the same supplier and you keep paying, keep ordering, keep paying. So you need to tell the supplier, you need to keep your supplier up to date and telling, I'm paying for this invoice, I'm paying for this invoice, I'm minusing this credit note. So you're sending this remittance advice every time when you make the payment. For example, you make the payment 10,000 today to a supplier and you need to tell them how you end up with 10,000. So you need to tell them like there is 5 invoice, 1, 2, 3, 4, 5 invoice. So invoice number 1, 2, 3, 4, 5. I minus the 2 credit note number A and B. And that's how I end up with £10,000. And I paid to you. So that supplier also know for which invoice you paid and which credit note you take away so that he can update your account as well. It's very important to send remittance advice to the supplier. This one sent by the customer to the supplier. Okay, so the question said remittance advice is sent to the supplier when the last day of the month following the month of invoice. For example, if I have an invoice for the month of March, let's say I have an invoice for the month of March, what I do, I send the remittance advice following month. So for the month of invoice March, let's say on the month of March, I have 3 invoices, invoice 1, 2, and 3. So when I send the remittance advice, next month, following means next month, which day? Last day of the following month. So the following month is April. Which day of the April? Last day. Let's say April is 30 days. So I'm going to say 30 of April. So remittance advice. So I send the remittance advice following month, last day. Try to understand this one, otherwise you'll be confused. So following month, last days. So for the month of March, I sending the remittance advice next month, end of the day. Okay, credit note are taken immediately. So any credit note I minus immediately. Justin Juke Bank with any bank, could be HNB3, that's a bank name, and Rose Reed Bank with Cardill's Bank PLC. That's fine. They could be have any bank. So Rose Reed is our supplier, isn't it? Because Justin Jukes sent remittance advice. That means Justin Jukes is the customer and Red Rose is the supplier. Okay, so I'm sending the remittance advice to Red Rose because I am the Justin Jukes. I'm the customer. I'm sending the remittance advice to the supplier, that is Red Rose. Below is an incomplete remittance advice, so they want us to complete that. That's not a problem. So let's do that. So you can see here there is some invoices, some description here. They said we can see here there's a February, March, April. So we need to understand where we are. So let's have a look at that. So we have a February, we have a March, we have some April invoice. So we have a credit note for February that we minus immediately. Every credit note we minus immediately. And we have some bank payment on March. And we have some invoices here. All right, that's fine. Let's read the question. What is the requirement here? The first requirement here is to whom the bank's remittance advice be addressed. Select one. So to whom we should send the remittance advice? We're going to send the remittance advice to whom? To Justin Jukes, to Rose Reid, another to our bank. We're not sending the remittance advice to the bank, isn't it? We're sending the remittance advice to the supplier, isn't it? So we're going to send the remittance advice to the supplier, that is Rose Reid. Okay. So they said, what will be the date shown on the bank's remittance advice? What will be the date shown on the bank's remittance advice? So which date we're going to show for the bank's remittance advice? So when we're going to actually send that? So we're going to send that 30 of April. Very well done. 30 of April. Then they said the next question we have, what will be the two amounts shown on the bank's remittance advice? So we talk about the March. So let's go to the March. Let's have a look how many invoices we have for the March. So for the month of March, we can see we have 2 invoices, isn't it? Invoice number 19 March and 14 March. These 2 invoices, invoice number 4591, 3295, and invoice number 5003, that is 2031. This 2 invoice is due for the month of March. So that one will be basically paid on April, end of the month. So end of last day of the following month. So what will be the 2 items shown on the bank's remittance advice? So we're going to say invoice number 4591. This is the one, and invoice number 5003. And what will be the amount paid? So how much are you going to pay these 2 invoices? If I added these 2, 3245 plus 2031. How much is the amount we're going to pay? So 3245
plus 2031, that is 5276. Yes, Epi, on the exam, we'll give you a scrap paper, white paper, so you can do your all workings, and you will do the exam on the computer. And of course, like when you do the exam on the computer, then you don't have any option to write anything, so you just give the right result. So you do the workings on your paper with your calculator, then you can do that. But before that, of course, like once we complete the book, we will do a revision class. On the revision class, we're going to pick a exam type question. So you're going to pick a question that come in the exam. We're going to solve it together. After that, we're going to arrange a mock exam. So before the final exam, you will sit in the computer on the center. You will do a mock exam. That will be exactly like a final exam. And once we finish the mock exam, then week after you will do a final exam. So you will be like very ready for the exam anyway. So don't worry about it. Okay, so before the final exam, we'll make sure we're ready from every point of view. We'll be like done the revision, we've done the mock exam on the computer like a final exam, and we'll do the final after that. All right, so let's move on. Let's move on to the next question we have. So this is the end of the chapter. Let's move on to the next chapter. We plan to complete 3 chapters every class, but sometimes the chapter is like kind of big, so maybe we can do 2.5. That is no problem for that. We can always manage that. Thank you, Sharon. Maybe the figure is wrong here, so you can get the right figure. Okay, so the next chapter is very, very important. We said double entry. Double entry. Double entry means dual entry, so 2 entry. Double entry means 2 entry. One is debit, one is credit. All of our life, we always listen, always like something is debit, something is credit, something is debit, something is credit. So from this chapter, we're going to learn how to identify what is debit and what is credit. Now, before I say debit and credit, let's talk about from where the debit and credit coming from. Let's talk about from where the accounting started. So if I said from where the accounting started, so I said accounting start from journal, Journal, journals. Accounting start from journals. Journals means something will be debit and something will be credit. Journals means something will be debit and something will be credit. So from the journal, after we prepare the journal, we prepare the ledger account. This is step number 2. LEDGER, ledger account. Ledger account sometimes called T account because it looks like T. Ledger account sometimes is called T account because it looks like T. So we have a journal account, journals, and we have a ledger account. So journals is debit and credit, and ledgers is from the journal, we move the debit and credit to the ledger account. From the ledger account, we take the balances and prepare the trial balance. From the ledger account, so we prepare the trial balance. So once the ledger account is done, the T account is done, we take all the balances and prepare the trial balance. And from the trial balance, we prepare our accounts. That is a statement of financial position and SPL, profit and loss account. So you can see this is the one we submit to HMRC. The accounting starts from here, from the journal. So one person will do the journal, another person do the ledger account, another person prepare the trial balance, and after the trial balance, we prepare the financial statement, and this is the one finally submit to HMRC. If you ask me, is there anything before the journal? I said only the transaction. Only the transaction. So before the journal, there is nothing except the transaction. Now, what is transaction? Transaction means buying and selling. For example, every day, a business buys something and sells something. So for example, you buy the raw flour, you make a packet and sell to the customer. So buying and selling, this is called transaction. Buying from your supplier and selling to the customer, this is called transaction. And from this transaction, you make the journal.
If I said sales is a transaction, buy, purchase a transaction, pay the rent transaction. So whatever you do to your everyday business life, this is a transaction. Whatever you need to do to make your business running, whatever you do, that's all the transaction. So this transaction you have to record in the appropriate form on your book through the journal, through debit and credit. So today we're going to see, now from this chapter, we're going to see how we can record in the form of journal from the transaction. So in the exam, they'll give you some transaction. We have to say what is debit and what is credit. So before we say what is debit and what is credit, we need to understand some formulas so that I can identify you are debit and you are credit. Otherwise, there will be a lot of transaction. How do I know you are debit and you are credit? So I need to know some formula. For example, if there is a two team, for example, if someone said, if you're wearing the white shirt, then you are doing level 2. If you're wearing the red shirt, that means you are doing level 3. So that means every time if I see someone with the white shirt, I say you are doing level 2. If someone with the red shirt, I said you are doing level 3. So I need to know how can I identify what is debit and what is credit. So you need to remember two formula. That's very, very important. If you have pen and paper, you can write it down. That's so important. So we need to remember two words. One is dead, D-E-A-D, dead, and another one is click, C-L-I-C. One is dead and one is click. These two we have to remember, dead and click. So let's find it out what is dead refers. So dead means D for debit, E for expenses. So let me write it down. E for expenses. Then A for assets. And D for drawings. So D for debit, E for expenses, A for assets, and D for drawings. You need to remember the date. So if you remember the date, you know what is the meaning of the date. What the abbreviation for the date is D for debit, E for expenses, A for assets, and D for drawings. So when your date is increased, when my date is increased, when the date going up, that time is debit. So if my date going up means if my expense gone up, if my asset going up, if my drawings go up. For example, I buy a new asset. For example, I pay for the rent. The expense is increasing, asset is increasing. So when it is increasing, going up, that time it is debit. When my date is decreasing, that time is credit. So for any reason, if my asset is decreasing, so you sell the asset, so asset is going, asset is decreasing. So you paid from the bank, so bank is going down, asset is decreasing. For any reason, if the asset is decreasing, that is your credit. On the other hand, we have a click. So C for credit, L for liability, I for income, and C for capital. So C for credit, L for liability, I for income, and C for capital. So when all of these gone up, that's your credit. So when your click gone up or when your click increase, that time it is credit. But if your click decrease or going down, that is your debit. Yeah. So when debt increase, that is debit. When debt decrease, that is credit. When click increase, that is your credit. When click decrease, that is your debit. You need to memorize these two. Otherwise, it's going to be difficult to identify what is debit and what is credit. If you remember that, your life will be very, very easy. Let's have a look on of the example. How can we identify what is debit and what is credit? There should be one example here. Let's have a look. There is a lot of explanation. You can read yourself all of this. That will be helpful for you to understand a lot. Okay, so here on activity one, this introduction to double entry. Double entry means dual entry. Double entry means debit and credit. What is the double entry for each of the following? So they said, what will be the double entry for each of the following? Explain each entry in terms of the element of financial statement. The first two have been done for you. So they said the first two are done for you so that you can carry on the next one. I said, okay, that's fine. This is the transaction. All we have, this is our transaction. Transaction means everyday life, what we do. Sell for cash, so you're making a sale. When you have a business, you make a sale. So this is your transaction. Sell for credit, that means customer will pay you later. Purchase for cash, purchase for credit. Pay electricity bill, receive cash from a customer, pay to the credit supplier, borrow money from the bank. All of this we do everyday life, isn't it? All of this we do our everyday life. So this is our transaction, and this transaction have to be recorded in the form of debit and credit. So we're going to see how to record that. The first one is sell for cash. Sell for cash. There is two things, sell and the cash. We need to identify. The first question you need to ask yourself, is it asset? Which one is income? What is it? The first thing, the cash. What is cash? Cash is an asset. Cash is an asset. What is sell? Sell is income. So cash is asset, sell is income. We have to identify the entry first. So if we see the cash, we understand that's our asset. If we see the bank, that's our asset. If I see the land, building, plant and equipment, everything, that's our asset. If I see the sales is the only thing, that's our income. Sell is the only thing, this is our income. Without sell, the money will never come. So sell is the only thing, we have income. So we understand that. Then our next question is it going up or down? So we talk about asset. Asset come under D, isn't it? Debt. Asset come under debt. So A for asset. A for asset. Now sell for cash. So I make a sale and we got the cash. Make a sale, I sell this pen and I receive the cash. So question is, cash is coming or going? If I make a sale, sell this pen and if I receive the cash, so what's happening? Cash is coming, isn't it? If the cash is coming, my asset is increasing or decreasing? The second question. If the cash is coming, the cash is increasing or decreasing? If the asset is increasing, so that will be debit or credit. If the asset is increasing, if the debt goes up, that will be debit or credit? That will be our debit. Try to understand it very, very well, because if you understand one, next one will be easy for you. So my asset is increasing, so my cash is on the debit side. My cash is on the debit side because increasing asset. Then the next point we have sell. Sell is income, and income come to the click, isn't it? Income come under the click. CLIC, click, I for income. So if I make a sale, my income will increase or decrease. Every time I make a sale, my income will go up or down. Is increase or decrease? Every time I make a sale, my income always increase. Sadia, if you make a sale, your income goes up or down? If you make a lot of sales today, your income will be up, isn't it? You said, I make a lot of sales today. I have a lot of income because I sell so many things. So yeah, so increase. So if your income is increased, sales is increased, so sale will be debit or credit. If the click is increased, that will be our credit. Very well done. So that will be our credit. So sales is our credit because his income is increasing. Very well done. You need to understand one at least very, very clearly. Otherwise, the next one will be very difficult for you. Okay, very good. Then the next one we have sales on credit. Sales on credit. This one, this time the cash is not coming because sales on credit. Customer going to pay us later on. This time the sales, we make the sales. Sales is income, no doubt, but the money is not coming immediately. Why? Because it's a credit sale, and customer said, "I'll pay you later." So it's a credit sale. Remember, if any customer said, "I'll pay you later," That means if it is a credit sale, we open a new account. This is called sales ledger control. Sales ledger control. If the customer said, I will pay you later, we open a new account, that is sales ledger control. And sales ledger control is a debit account. Remember that. Sales ledger control is a debit. Why? Because customer going to pay you some money. Customer going to pay you some money, and this money is asset for you. So if I said I'm going to receive some money from Khalid, so Khalid going to pay you some money. So Khalid is my asset. So Khalid is my sales ledger control. That's my asset, and that's a debit. We can say trade receivables, Belal, but trade receivables is mentioning only one customer. But if you say sales ledger control, that means all the trade receivables inside. If I say trade receivables or sales ledger, I'm talking about only one customer. But if I said sales ledger control, I mean all the customers. Maybe I have 100 credit sales. So I'm expecting £100 from the 100 customers. So total together we call it sales ledger control. But if I said only trade receivables or if I said only sales ledger, I'm talking about one customer. So always, if the balance, the total balance, so I'm expecting all the money from all the customer, trade customer, it's a sales ledger control. So total amount. So sales and credit, I don't know how many sales we make. So we said sales ledger and control. So sales ledger control is a debit, always debit is asset because you are expecting some money from the customer. So sales ledger control is asset because asset is increasing. Because asset is increasing, you're going to, even though you didn't receive it, but we're going to get it soon. So this is sales ledger control. Another one is same, sales is income, so it's a credit. That's normal. Let's talk about the next one, third one. Purchase for cash. What will be the journal for that? Two items here. One is purchase and one is cash. One is purchase, one is cash. So purchase is expense, isn't it? Purchase is expense. So if I make a purchase, my expense always go up, isn't it? So expense on the debt. So E on the debt side. So if every time I buy something, my expense go up. For example, if you make a shopping, your expense will go up. For example, sometimes you said, oh, this month I'm not going to shop anything because my expense is already high. That means every time I buy something, my expense go up. So purchase is expenses, and if the expense goes up, that means it's a debit. On the other hand, cash is asset. If I buy something, I have to pay for that, isn't it? So if I make a purchase, let's say if I buy the pen and pay £10 for cash, so cash is going, and cash is asset. If the asset going down, the asset is on the debt. So if the asset goes down, that's our credit, isn't it? If the debt goes down, that's our credit. So I said purchase, that is our expense. So purchase is a debit because expense increasing. On the other hand, cash is a credit on the credit side because asset decreasing. All right, next one, purchase on credit. This time purchase is expense anyway, but on credit, this time I'm not paying cash. I'm not paying the money. So I'm going to pay later on. So I said purchase is debit anyway, is expense is increasing, purchase debit because expense increasing. On the other hand, I'm going to write, no, Belal, we're not going to write the bank because it's a purchase on credit. That means you didn't make any payment from your bank or you didn't pay any money. So you're going to pay later on. So we called it purchase ledger control. So when we expecting money from the customer, we said sales ledger control. When we're going to pay money later on to the supplier, we called it purchase ledger control. And this is our liability. That's our credit. Because we have to pay some money. This is our liability. This is our liability. If I buy something from someone and if I said I'll pay you later, so I'm liable to pay. So I have a liability. So I'm going to say purchase ledger control. This is credit because liability increasing. If I buy something and if I said I'll pay you later, I increase my liability. Okay, next one we have Pay electricity bill using cash. So we have electricity bill, this is our expense, and cash is asset. So electricity bill is expense, expense going up if I pay the electricity bill. So electricity bill will be debit, and cash, by cash, so my asset will go down. So cash will be credit. Very well done, Evelyn. Very well done, Nehal. Very good. You're understanding. This is a tricky topic. It's not easy topic. It's a tricky thing to identify very quickly, but all of you get it really quick. So happy all of you get it right. It's very quick. It's very nice. So asset going down, that's our credit. So we said electricity bill, that is our debit because expense increasing. On the other hand, cash is going down because we paid by cash. Asset decreasing, that's our credit. All of this activity, we have an answer on the back of the book, so you can always check. You can do some practice. That will help you to understand more. Okay, the next one we have, number F, we have received cash from a credit customer. Now you see that on number 2, we have a credit customer. You see that? We make a credit sale. That time we created the sales ledger control, isn't it? Now this person paying to us. So when I make a credit sale, we don't make a credit sale for forever, isn't it? So maybe 1 month, next month, the person is going to pay me. So of course, when they're going to pay me, so I have to make them opposite. So before I said my sales ledger control is debit, now I'm going to make sales ledger control credit because he paid to me. If he paid to me, and if I said you are my asset, you are my debit, he will be very, very angry, isn't it? He will say, listen, I'm not your asset anymore. I paid the money. Can you make me credit so that my balance is gone off? So remember, debit and credit like a plus and minus. Very, very careful with these two words. Debit and credit is like a plus and minus. So debit and credit like a plus and minus. So if something is debit, if you want to remove it, you make it credit. If something is credit, if you want to remove it, you want to make it debit. So here I'm going to say sales. I'm going to say what I receive cash, isn't it? So I receive cash from the customer, from the credit customer. So cash is coming. So cash is asset is going up. So that will be debit. So asset is up. And I'm going to make credit sales ledger control because asset decreasing. Before I said sales ledger control debit, now I'm going to make credit because now he paid. He's not my asset anymore. So I want to remove him. If I want to remove him before he was debit, now I'm going to make him credit. So it's going to be plus minus gone. Then pay cash to the credit supplier. You remember on number 4, we make a credit purchase. Now we are paying to the supplier. So if you are paying to the supplier, what happened? My liability will be vanished, isn't it? What's going to be journal then? So before that, I said purchase ledger control is a credit. That's my liability. Now I'm going to say purchase ledger control is a debit because it's not my liability anymore. So purchase ledger control is a debit because this liability has to be gone. So, and I say liability will be decreased. If the liability, if the click goes down, this is our debit. So you said purchase ledger control debit. And what will be credit? How I'm paying? Paying by cash, isn't it? So if I pay by cash, my asset is going down. If my asset going down, my debt is going down. And if my debt is going down, that's a credit. So cash, credit because asset going down. I pay by cash. All right, the last one we have, borrow money from the bank. What happens if you borrow the money from the bank? If you borrow the money from the bank, so money is coming to you. So your cash or bank will be debit. So I would say bank will be debit because money is coming. Bank is debit because asset is increasing. On the other hand, your liability will be increasing. If you borrow the money, if you take the loan from the bank, so your liability will be increasing. You have to pay this money back, isn't it? So I'm going to say liability. So loan will be credit because liability increasing. If I take the loan from the bank, my liability will go up because I have to pay the money back. So liability increasing, click is increasing, so it's my credit. On the other hand, if I take the loan, money is coming to me, so our bank will be go up, so bank will be debit. So you can see that like this is how from the transaction we can identify what is debit and credit. It's very, very important. I would advise all of you, please please revise this chapter again, because this activity again, we're going to do it from here on the next week. But I will advise you, please make sure do this chapter again, because this chapter is very, very important, because debit and credit will be linked to rest of the chapter. So chapter number 5, 6, 7, 8, 9, 10, 11, 12, every chapter we're going to see the debit and credit. So please make sure you understand your debit and credit, not only here on the any paper or any accounting job you're going to do. Debit and credit will be everywhere. And I'll tell you, debit and credit is so important. Why it is so important? Because on the software, if you can only tell to the software what is debit and what is credit, rest of the thing will be done by the software automatically. For example, if you can only input the transaction like what is debit and what is credit, and rest of the journal, rest of the ledger account, rest of the trial balance, and rest of the financial statement will be prepared automatically by the software. Only you need to tell the software this is debit and this is credit. If you enter this transaction on the QuickBook or Sage or Xero or any type of software, you enter the journal, then the ledger account, then the trial balance, then the accounts will be prepared automatically. You don't have to do anything. Rest of the things software understand what you mean. You don't have to prepare all of this. So only the journal. So journal is the foundation. Debit and credit is the foundation, is the backbone. It has to be strong. So make sure you've done enough practice for that. Make sure you remember your dead and click, and make sure you know how to use your dead and click. It's very important. Sometimes students remember the dead and click, but they don't do enough practice and they don't know how to pick what is debit, what is credit. Very, very important. All right, so I think we reached to the time 9 o'clock. So we're going to finish today, and of course, like from next week, same time 6 o'clock, we're going to start from this chapter and from activity 2. Maybe this one, activity 1, we're done. Maybe we're going to start with the after that, so after activity 1. But during this time, you can practice the whole chapter if you want, and otherwise, like you can revise this whatever you have done today. You can revise once again. If you have any question for me, you can email me, and I don't mind to take the class unless you have any issues. Like I know it's a bank holiday, but if most of you think like we can stop the class, that's not a problem. But I don't mind. I can take the class. So if most of you think like you are going for a holiday or somewhere, then we can postpone the class. But if you think like we can do the class